A Look at Finance is underwritten by Janney Montgomery Scott, trusted advisors for generations.
Welcome back. It's Thursday. Stephen Carlton, First Vice President, Janney Montgomery Scott, here with our weekly look at finance.
Great to be here.
Great to have you here, sir. Surefire round today. We've got a lot to talk about, and not enough time, so let's go right to it. Tough day on the market. Some earning reports coming in that had an impact on the market, but once the bell had rung, a good earnings report coming in that may have an effect on the markets in days to come.
Isn't it funny? It goes back and forth. We just came off of one of the best years we've seen in a long, long time, up almost 30% on the market. And we've had a difficult week, and everybody forgets about what kind of fantastic year we had. So yeah, some earnings report in the last week have been discouraging. Some of the profits are down.
So some of them that missed the dollar store, Best Buy, Bed Bath & Beyond. The one that's interesting there is the dollar store, because a lot of folks are shopping there, and these, when the economy's tough, and it is still tough on Main Street, usually the stores like that really do benefit.
We talk about disposable income, and you're right, David. When you talk about the bottom half, the average American, the disposable income that they have, if they don't have any money left at the end of the week of their paycheck, they're not going to go to the dollar store, and so that's a real indicator of the overall financial health of the lower middle class.
If they're not going to the dollar store, they're definitely not going to Best Buy or Bed Bath & Beyond.
And the numbers show. Yeah, they definitely had a difficult holiday season.
Markets closed. Intel came out with some positive numbers.
Yeah, so Intel did fairly well. The revenue looks pretty solid. There's going to be pockets of good news and bad news in this earnings season. We're just coming out of the gate yet, so people have to be careful not to assume too much about this at this point. But there's a lot of stuff yet to come out, and like I said, it's very early. People are reacting a little stronger than maybe they should.
Okay, Jeremy Siegel, a name I didn't know until you teach me so much in these seconds. An economist at the Wharton School of Business, and in your circles,
a big deal.
A big deal.
Yeah.
He's coming out with some reassuring news to our rocky start to 2014, and you kind of said this last week about the rocky start to 2014.
Yeah, it's funny because a lot of clients are saying this week, they're like, how did you know it was going to go? And we don't know. But after having the kind of season that we've had in the last couple of quarters, it's only reasonable to have a little bit of profit taking, a little bit of selling, some evaluating some of your positions. And Mr. Siegel just kind of came back and said, you know what, let's look at the big picture. This year looks like it's going to finish the Dow at about 18,500 in his opinion. But it's not going to go straight up. It's going to be a little bit of a bumpy road, but that's typical. That's the stock market. It doesn't go up every day.
He says, don't worry.
Don't worry, be happy. He didn't say that, but I think that's the general attitude. People, I think the concern is sometimes that it's either amazingly good or it's horrible and there's nothing in between. And there's some positive signs, like the unemployment numbers, some of the encouraging signs there. There's good news in here. But just try to be objective and take a look back on this.
All right, some big banks coming out with some numbers. Citibank saying their profits are down, while Bank of America says that they had a great fourth quarter last year. You're saying there's a little more behind this story than actually, Bank of America says that their profits increased in the fourth quarter to $3.2 billion. But you said a little bit more behind this number.
You have to dig a little bit deeper on the earnings, and I think with most banks, they have a little bit of lateral about what they can do accounting-wise to move money back and forth to take profits or to take loan loss reserves, raise them or lower them. So the bottom line is, even though mortgage applications are down, we're seeing that at Wells Fargo, we're seeing it at Bank of America indicate that that's the case. The new applications for mortgages are down. They've been able to keep costs low, they've been able to cut costs, they've been able to run lean, and even though interest rates have gone up, they're still showing a strong profit. So yes, profits are down for a lot of these companies, but the revenue's holding fairly well.
All right, the surefire round continues. We're just on to another subject matter straight away.
Yep.
A report from the New York State Senate Majority Coalition saying there's 2,219 reasons why New York businesses are at a competitive disadvantage. This isn't new news.
Well, what I want to know is, why did they finish at 20? Why did they stop at 19? They could have come up with one more. If they came up with 2,200, why not 20? That's a lot of reasons. But again, it's the glass half full, glass empty. I think this state has a lot of challenges. A lot of people talk about high taxes, talk about some of those things that are there, but you know, I wonder what kind of list we could come up with saying, you know, what are the positive things? You know, the governor and some of the strategies, some of the programs we've put in place in the last couple of years are starting to, you know, have benefits. We're seeing it locally, too.
Or perhaps spend the time, instead of making up a list, try and work on making that list non-existent.
And
it is the Senate Majority Coalition that are coming up with this list.
And there's a lot of work that we can do. It's interesting because both sides, both parties here are recognizing there is areas in New York when it comes to manufacturing, when it comes to competing with some of the southern states, we do have to reevaluate some of the policies we have in place because it is difficult to do business in New York on a lot of levels, and I think those areas can be improved.
All right, couple developments this week on the casino front. It's something we're all, you know, we're all keeping an eye on. The prospect for a casino in upstate New York, of course, Saratoga Springs, much talked about. There's been talk about perhaps one up in the town of Moreau. Now Albany is getting in on the game. Obviously, Rensselaer, they've talked about it. We have a picture of the place that this Rochester development company called Rochester-based Capital Gaming LLC wants. It's the old Tobin First Prize Center where they made hot dogs.
It's quite a looker.
I mean, can you see casino look like that?
That's amazing.
And look at the transformation.
It's fast. Amazing what they can do.
Interesting site, 32-acre property. They bought it for a steal, $5 million for those 32 acres because it's right on 787.
Right.
But it doesn't really scream casino to me.
You're not the first person to say that. It's fascinating, David. This week, I've had conversations with people over at Spot Coffee. Last night at Chianti's over dinner, somebody came over and talked to me about it. Everybody's talking about the casino, whether it should be in Saratoga, should it not, what the challenges are. This is a topic that's going to get more and more loud, more and more strong opinions are going to come out. But yeah, this location just doesn't seem like the ideal spot.
It doesn't seem like the ideal spot. The other news this week is that the casino, the state is a little behind on getting that committee together that's going to be picking these sites. They're supposed to have a consultant on staff. It's supposed to be there by January 9th. Still not on staff. Could delay the deadline. It may not have any impact at all. It's still early days.
Yeah, it's still early, and you know this is going to be a complicated process. The hearings that are taking place, like just recently in Saratoga here, there has to be the feedback from both sides, and I think it's going to be a long and interesting discussion.
All right, we have very little time left, so I'm going to give you the pick. You want to do the Google 100 or you want to do the Apple story?
Oh, we got to do the Apple story.
Right. The Google 100 is well, Google not. It's the 100 best companies by Fortune magazine.
Yes.
I guess Google it, and you'll get the answer.
Google one, yes.
Google #1. All right. Apple have a little bit of a settlement this week because of some trouble with some apps.
Well, how many parents have had their kids have an Apple phone, and they get their bill at the end of the month, and all of a sudden their son or their daughter has downloaded this application or that application, and all of a sudden they've got a $30 or $40 bill they weren't expecting. Well, good news, this settlement that just was announced, Apple's going to reimburse a lot of these individuals that were charged for these apps with minors, kids, where the approval process wasn't properly done. And so there's 32+ million that's going to come back in one way or another to reimburse a lot of these families. So you could be seeing
a little check in the mail.
Yeah, hopefully.
Or a discount on your next bill.
A discount on the bill, yeah.
$32.5 million in that settlement over those apps that were with the Federal Trade Commission. They're the ones that sorted that all out. All right, Stephen Carlton, First Vice President.
Thanks, David.
Jenny Montgomery Scott is always packed with financial information.
Fast and full.
Thank you, sir. Now, to see this segment and all our segments, head to the website. It's looktvonline.com. We post it there each and every week.